Hi everyone, it's Dione Lee here from the Accelerate Group. I hope you enjoyed the weekend with Mark Rolton and the team. It was definitely a big weekend for all of us, and I'm sure you've got a lot of knowledge that you're just trying to process at the moment. Of course, there's a lot of people trying to speak with me one-on-one, which we are getting through slowly. Please bear with us. We are trying to get through, about 300 of you all in the first week. So I just wanted to put this video out to explain basically where we fit into the whole process. My company is completely separate to and independent to Mark. Obviously, Mark can't sell property and do the finance. So we are independent of Mark. But my history is I am a student of Massland as well. I did property options and conclave back in 2011, 2012. So I understand what you're doing. So I wear the Massland student hat, the same as you guys do. Secondly, I've been in finance for 27 years now. So I understand what the banks do. So I wear the finance hat as well. And I've been buying property myself since I was 20. So a lot of years there of lots of property that I've bought, good and bad over the years. But between the three hats that I wear, hopefully it's going to give you some assistance as to where you go forward as well. And we can help you to build your AAP, no matter where you're at right now. So we start from wherever you're at currently, we work out where you want to be, and then we work with you to help that happen over the next few years, however long that takes. So it's a long-term relationship with us if you want to come on board, and we'd love to have you. So just bear with us while we deal with everybody all at once. So that's where we fit into the program. Secondly, what we really look at is where you are right now. Some of you are very different places, but whether you're starting out with just a property option to get some deposit to start building your AAP, or whether you've already got a couple of properties or just your owner-occupied home, no matter what that is, we'll help you with wherever you're at now and find out where you want to be and get you there. Okay, so what I really want to show you is something that we're very lucky to have. Chris, who's on the screen below, he actually developed a program, it's software actually, that will basically show you what you learn. A lot of the things Mark taught over the weekend, such as offset accounts, the impact that they actually have, huge impact that they have on your mortgage and the amount of interest that you pay. We've actually got that in a program which, when we put your numbers in, will show you exactly how that looks. So what I wanted to do today was just show you what that looks like, have Chris actually do an example. These are some real clients of ours that recently went through the program, and originally they had their first property that they live in, and we just went through restructuring their lending, not in terms of companies and trusts, but just in terms of the lender that they had, the variable versus fixed, and all of the multiple offsets that we like to set you up with, rather than just one. Most of the majors will only give you one offset. There is one exception to that. So we do prefer to go more the second tier lenders and somebody that will actually give you all of those options. So Chris, can you please bring up the example? We've got Jack and Mary here. We have changed names for privacy reasons, but this was a real situation. So Chris is going to flick through the screen here as I go through it. So Jack and Mary, now their situation was they've got their incomes of Jack on 95,000, Mary on 35,000. They have 2 kids. Their living expenses are about 3,500 a month, and they have a home. So their current home is worth about 700,000. They have a debt of about 400,000. They had a car loan of 12 and a credit card of 5. They also had cash in the bank of 15 grand. And we put all of these details into the program to then work out if we were to restructure them with their lending with multiple offsets, not controlling what you spend, but you set your parameters about how much you want to be spending each month, but we help you keep accountable to that. So when we did these numbers for Jack and Mary, the results were as follows. Chris, if you could just show us the outcome. So what it meant here is that by using their offsets and their multiple offsets properly, instead of having a 30-year loan term, they were actually going to pay off this home loan in 8 years and 7 months, saving over $154,000 in interest. That was at a 3% interest rate. So as you can see, where Mark talks about offset account shaving a third of the time off your home loan, in this case, it was actually 2/3 plus. So they make a huge difference. It's just a matter of knowing what they actually do for you and getting that set up properly for you. All right, so stage 2 of this program, which is the exciting part, is when you go to start buying an investment property, whether it's your first one or if it's the third, fourth or fifth one, no matter what it is, we can then put those numbers for that property into your plan as well. So, and model that for you. So in this example, I'm asking Chris to put in a property value of $425 for an established property. So the purchase price of $425, rental income of $390 per week. Okay, and now we'll see what the result of that is. Got rent there showing, okay, 95% occupancy rate. So Chris can allow for all sorts of different things in this program, whether you're on salary sacrifice, whether you're self-employed, whether you're, no matter what the case is, if you, you know, you're about to have a baby and the wife's income is going to stop for a period of time, all of that can go into here and then it will start again perhaps when she goes back to work. So there's so many different things in this program that Chris can do for Mary in this instance. But in this case, what this has done, you can see the table here, with that new property added in, the home loan that was going to, well, and all the personal debt, including their personal loan and their credit card, was going to be paid out in 8 years and 7 months before. Now with the new property involved, it's shaved another couple of months off of their own home loan payout, brought it down to 8 years and 5 months. And the investment property that we've added in shows that that will be paid out as well in 14 years and 11 months. So not you just have one property, or in this case, Jack and Mary would have had one property that they purchased and owned in 30 years. They now have 2 properties they own in under 15 years. So of course, the more property you buy, the more positive geared or positive cash flow that you're getting out of that, the better off this is going to be for you. So it's quite exciting to see your own numbers in this, which we're offering to you if you would like to have a look at that. And it is an ongoing relationship. It's a long relationship with us if you want us moving forward. You know, we have 27 years of finance experience for me, 35 years of banking and financial planning advice for Chris. But really this is just modelling for you, so you get an indication of what it looks like for you on a monthly basis. So each of these columns Chris is showing you here will show you exactly what you owe on your lending and in your what you have available in your offsets, and it will actually break it down part by part where you can actually get the calculator out, calculate it yourself, make sure it all adds up. And it's a true plan that gives you a month-by-month basis that you get out of it at the end. And of course, as you buy another property or life changes or your financial position changes, we change everything as that occurs as well. You just contact us, we update your plan, give you the new copy. So if this is something that you would like to see for yourself, which I would strongly encourage as you're starting to build your AAP, or even if you're partway through it, or you're still a way off, you need some basic financial structure set up for you to begin with. So what I would encourage you to do is there's going to be a link, or there is a link in the email that I've sent this video to you in. It's a Calendly link to have a conversation with Chris, put in your own numbers. You will be on Zoom and it will be over an hour. There is a cost to it of $99 to cover the time, but it'll be the best $99 you spend. So I strongly encourage you to get onto the link, book in your time, and make sure you've got that really good hour put aside to speak with Chris. If there's 2 of you, if you've got your partner, make sure that your partner's there as well. Okay, so thanks so much for your time. Please, if you are serious about getting your finances under control, you want to work out where you're at right now, find out how you're going to get to where you want to be and build that AAP or that portfolio of properties, please get in touch. Let us start at the beginning of your plan and then work with you for a very long time to work out how we get you to where you want to be. There's a link in the email that you need to click on. It's a Calendly link to Chris. At that point, you'll book in your time, you'll pay the payment, and then you'll be confirmed. Hopefully that all helped, and I look forward to working with you all very soon. Thank you.